Yesterday, Iran reopened the Strait of Hormuz, and Bitcoin squeezed to 78,268.
Iran has announced the full closure of the Strait of Hormuz again.
Big money is stepping back in.
Bitcoin just had the wildest 48 hours of 2026. And what's actually happening underneath the noise is way more important than any headline you've read this week. Stick with me, because once you see it, you can't unsee it.
In a shocking turn of events, Iran has announced the full closure of the Strait of Hormuz again. Bitcoin, of course, going down, oil starting to go up again.
So a country just closed the Strait of Hormuz. That's the shipping lane where roughly 20% of the world's oil supply passes through. They closed it twice in 24 hours. Tankers got fired on, ships turned back, Trump promised one thing, Iran did the opposite. And the headlines all want to point at the same thing: chaos. But here's what the chaos hides. The banks can't fix this, the Fed can't fix this, Trump can't fix this. You can't print your way out of a closed shipping lane. You can't sanction your way past gunfire. This is the exact situation Bitcoin was built for. It doesn't need a country to back it. It doesn't need a bank to process it, and it doesn't need permission to move it. And right now, while everyone else is watching the headlines, something interesting just happened in the data. If you want the data, not the hype, subscribe. I do this every single day. Watch what happened on Friday.
The relief sellers ran out of coins, the shorts got liquidated, the ETFs absorbed everything, and Bitcoin printed its highest price in weeks. Let me give you the numbers so you understand the scale of what just happened. ETF inflows on Friday, $663.9 million in a single day.
$663 million in one day. That's not retail money. Retail, that's the people like you and me, individual investors. They're panicking right now. The fear and greed index, that's a simple gauge of how scared everyone is on a scale of 0 to 100, and it's sitting at 27. People on Twitter are calling it a top. That money is institutional. Pension funds, wealth managers, the people who manage your retirement. The same desk that ignored Bitcoin for 15 years just stacked over 663 million in a single session. And here's the part nobody is talking about. Every time the world gets weird, the same thing happens. Big money quietly buys Bitcoin. They're not buying because of the charts. They're not buying because of memes. They're buying because of what's coming. And one analyst just put it better than anyone else.
Here's something the headlines aren't telling you. Bitcoin is sitting around $74,700. Barely moving. Quiet. Almost boring. But underneath that flat price, buried inside the derivatives market, inside on-chain data, inside the behavior of large institutional players, there's a structural setup forming that hasn't been seen since 2023. And the last time conditions like these existed, what followed wasn't calm. What followed was violence. We're not talking about small moves. We're talking about a scenario where Bitcoin either rockets toward $125,000 or falls into one of the deepest structural drawdowns the market has seen in years.
That's a heavy way to say it, but the setup is real. And the strongest sign where this is headed isn't on a price chart. It's on a balance sheet. Look who just announced they're moving in.
The big story right now is simple. Big money is stepping back in. Bitcoin ETFs just saw strong inflows again. And now, Goldman Sachs is filing for a Bitcoin-linked ETF. That's not small news.
Goldman Sachs, the same bank that wouldn't touch Bitcoin for years, just filed to launch their own Bitcoin product. Not because they got religious, because they got the memo. The world is breaking in slow motion. The system is showing cracks in places nobody's covering, and the people who actually run the money are quietly moving into the one asset that doesn't break when the rest of the world does. This is why Bitcoin had to be invented, and the people who get it just keep buying.